Hi, and welcome to Sanford Advisors Software and Internet Monthly Report for July 2023. As usual, we're going to review the previous month's M&A and venture capital activity across the entire technology landscape. So let's dive in on the M&A front. At a high level, we saw $8 billion in disclosed transaction value for a median revenue multiple of 2.6 times across 72 transactions for the month. Of the larger, more notable transactions for the month, Databricks' acquisition of Mosaic ML signals the growing importance of AI optimization, both from a model training perspective and cost optimization. Crosspoint Capital's take private of Absolute offers an interesting thematical point as well. Public markets are still compressed by the current rate environment relative to the private market, especially in certain verticals, which allows the public to private transactions to continue to offer attractive returns for shareholders and investors alike. We continue to see a selective M&A market with annualized figures for both the number of deals transacted and the dollars transacted lagging far behind the bull markets of 2021 and 2022. But the relative size of recent deals is helping prop up the annualized dollars invested, with the highest average deal size we have seen in 10 years data. Strategic buyers continue to be the most active in this market, representing the buyers in over 66% of the transactions over the last 12 months. Taking a look at valuations for both software and SaaS transactions, July represented the lowest median valuation we have seen since the first quarter of the 2020 pandemic. There's limited data, however, with 2 months still left for the third quarter, so we could see the median return to the mid-single digits we have experienced the last 2 quarters. July represented the tightest band we have seen across the bottom and top percentile of deals too, but again, more data is needed before we draw too many conclusions here. We've mentioned this previously, but another interesting point can be seen through the spread of SaaS multiples and non-SaaS multiples. This is the third month in a row where the 2023 year-to-date multiples have been extremely close and hovered around 4 times. Buyers have placed more emphasis on profitability, so SaaS valuations are mirroring more traditional cash flow valuations. Moving on to transaction volume, this is the 6th straight month where we have seen a lower level of transactions, less than 100 deals for the month. It is also the second time this year we have had a month with less than 75 transactions. We expect this trend to reverse as we move into the fourth quarter. Prior to the pandemic, there would typically be a post-summer uptick in deal flow, so it'll be interesting to see if we will return to the more traditional summer slowdown, or if the market activity will remain low in the fourth quarter until we start to see some easing in the interest rate environment. Switching gears to the venture capital side of things now, let's take a look at how July 2023 did from an investment perspective. We saw $2.3 billion of invested capital for the month, a median deal size of $3.7 million, and almost 350 VC transactions. There was no real mega deal for the month, but a notable transaction was the Series C round for Silo, drawing attention to the successful implementation of AI and machine learning to automate workflows. Moving to monthly VC deal counts, we saw a dip back to the 24-month lows in the 340s, but as just mentioned, the median deal size was up, much of which was driven by healthy volume in the mid-stage rounds. Looking at annualized deal volume and dollars invested, we are still lagging behind on an annualized volume perspective and will likely finish the year close to the 10-year low in terms of total activity. But with almost $45 billion of invested capital year to date, we are on track to exceed the pre-pandemic levels of dollar investment and could potentially close the gap with last year on an annualized basis if we continue to see larger deal size and some additional mega rounds. As noted in prior months, we continue to see an interesting trend with the inverse of early stage valuations relative to mid and late, and hopefully that continues to drive increased volume. Mid-stage valuations have been hit the hardest, down over 60% relative to last year, as the exit opportunities have been impacted with soft IPO markets and lower M&A volume. And with that, we conclude this month's review of the software and internet M&A and VC market update. As always, thanks for listening. We hope to see you next month.